This is Joel Alconin from Benzinga Pre-Market Info, and we have a special guest on today, Andy Swan, entrepreneur and angel investor. Andy, how you doing today?
I'm doing great, guys. Thanks.
Okay, so we first got to take care of some business here. Joe told me you're from Louisville. Is that correct?
Yeah, yeah. I'm
Okay,
I'm here right now.
okay, but I am a big Kentucky Derby fan. But are you a Louisville Cardinal fan?
Yeah, I'm a pretty good Louisville Cardinal fan, but I'm not one of the crazy ones that has to hate, Kentucky and everyone else around.
Okay, because I ran into a few of those haters when I was down at the Final Four back in April, and I guess it was similar to my experience at the Michigan State game where Michigan lost, so it was probably a good thing because I didn't get beat up by some of those rowdy fans. But glad you're not on that side of the equation here, so I won't give you a hard time. But just starting out, could you just give us your brief educational and markets background?
Sure. So I actually started trading when I was in college. I was in my final year playing basketball at Bellarmine University, and I didn't really have to take any classes because I was on my fifth year. I had redshirted, so I had like one class that I never went to, and so I started studying the markets just on my own. This was like 99 and 2000, so everything was going crazy. I mean, CNBC was probably one of the top watch channels. It was on, three channels at the gym. When you went to the gym, it was mania. And so I got interested in the market that way um, during my downtime in college. And then, it's kind of a cool story. I was in, back then AOL chat rooms and stuff like that were pretty popular. And so I was in these chat rooms all the time, every day, and actually had one or two guys that summer actually private messaged me on AOL and said, "Hey, you're doing really well. If I send you money, can you send me your trades as you make them?" And light kind of went off. I was going to law school in Boston within a little while, and I didn't really want to do that. So yeah, I says, "Yeah, send me the money." They sent me like $750, which more than covered our rent, and and that's sort of how I got started with trading somewhat professionally. And so I went to law school, dropped out in about 6 or 7 weeks, and we started day trade team. Me and my brother Wayne, and started day trade team where people could, we made it a little more formal where people could pay us to follow our picks and stuff like that. So that's really how I got started. It's purely self-taught stuff, and it's been a good ride over the last 14 or 15 years.
That's interesting. So you had initial success then. I mean, because I wanted to talk to you about the learning curve and whatnot. So you didn't. I know from my initial when I went out from a desk trader to a prop trader. I had a little bit of period of of scratching a little bit in the red here before I got green. So you had the initial success then.
Yeah, but it's not because I was smart. It's because the market was set up for that. I mean, this was 99, 2000. Everything went up every day. Really, I mean, you could have been brain dead and made a lot of money. And that's exactly what I was. I had no idea really what I was doing when I look back on it. And that showed a year later. I mean, I was losing hand over fist every single day. And because the market was going down and I wasn't used to that. And so I have more than paid for my education.
Right. So now, obviously, experience both up markets and down markets here. You're comfortable in trading both sides of the market. Then, right? You're trying to be non-biased and are as willing to be long the market as short the market because I think that's what a lot of traders run into. A lot of day traders is they become opinionated, and so you're comfortable trading both sides of the market. Then, correct?
Yeah, yeah, I really am. As long as things are moving, and then even if they're not, there's always with the addition of option spread trading into my arsenal, probably 6 or 7 years ago, that really transformed me into someone that can just sort of take what the market is giving and take advantage of that without really injecting your own biases or opinions into the market, which is what I think just kills so many traders.
And just going into that option spread trading, I mean, obviously, if you take a direction there, you're taking advantage of you're obviously long the premium in one instance and short the premium in the other. So you have a little bit of a hedge on, you have a little bit of time decay working on one side for you. So that's definitely a way to take advantage of the markets as well. Changes in the day trading industry. You mentioned, you got started in the heyday when the markets were going straight up and had a little problems when the markets were going straight down. Can you just talk a little about, the changes in the day trading industry and maybe get a little bit, have the high frequency trading and high frequency trading balance, have they caused you to adjust your style at all?
Oh yeah. I mean, so 14 or 15 years ago, it was an advantage if you had level two quotes. I mean, that was a huge advantage that you had over the rest of market participants. And now, they're paying, whatever it is, hundreds of millions of dollars to lay cable for, a 6 millisecond advantage that you just quite simply cannot match. And so, I don't. I think that there's, now day trading wise, extremely short term trading. There's a negative edge to be overcome, which I don't generally like to participate in. I'm not one of these guys that thinks I can beat the blackjack table. So I've actually moved away from short turnaround trading and moved much more towards not long term but middle term stuff, and using these option spreads where there's still some edge and things like that. But I think the change has been dramatic. 14 years ago, stuff was moving in increments of eighths of a dollar, and you could see that eighth of a dollar move before it moved. And now that's not there. And so on the other side of it, commissions have dropped, and there's a lot of lower fee type of structures that make it better, but it's really tough. So I have really shied away from day trading personally, and I really just don't advise people, especially new people getting into the market, to get into that because, like I said, it's so tough to check your opinion and emotion at the door. In the short term like that, I kind of like to let my trades breathe a little bit more.
The one thing about the tape reading, I mean, that used to be, one advantage that you had with the level two quotes. You could identify buyers and sellers, and then, once they were mopped up, you could still participate in those prints. But now it seems with all the 100 share prints going off, I remember the only time a stock went 100 up on the quote, back 10, 15 years ago was when, there was a market meltdown or there was major news coming out on the company. And now 100 by 100 is the standard quote, basically what you see, especially in some of these higher priced stocks. So, one thing that you see with the tape going off, you see a lot of these sub penny prints, and the internalizers just making small increments off each of these orders. And one of the reasons that they went to the pennies from the well, was eighths and they went to sixteenths, was to really benefit the small investor. Do you think that's really? Do you think the penny prints and sub penny prints have really benefited the small investor?
Actually, I do. I think anytime, pricing, the more exact the pricing, the better it is for all market participants. I think that it has definitely been to the detriment of the small active day trader. No question, because it just made it that much more impossible to compete with a computer. But the for the overall marketplace, I think it's been definitely a net positive. There's a lot more liquidity because those things trickle up. I mean, it's sub penny in Microsoft or Google sometimes, but that also means that for less liquid stocks, you've got smaller spreads as well, because those high frequency computers and those algorithms are injecting liquidity for small investors, even on the most thinly traded stocks. It's market wide, and I think it's a net positive for the market.
Okay, well, Dennis, my partner's here is at a CFA meeting, but we're gonna have to have you on again and have you go head to head with him as far as the smaller investor benefiting because actually a lot of the spreads in these smaller stocks. I mean, there's not a lot of liquidity off the opens in them, and actually there has been some studies that showed that some of the spreads in some of these more illiquid stocks have increased. But he's the expert on that, so I'll take a pass on that, and we'll just move on here. Now, you said that you kind of got away from the day trading, and you're more of using the options market. So what time are you looking at? Much longer time horizons now with the options markets? Are you using the option markets for 1, 2, or 5 day moves, or have you now adopted your trading style to be more longer term?
Both really. I mean, um, we do a pretty good job with very short-term trades around earnings season. I think there's always a well, not always, but most of the time there is an edge in trying to capture time decay, premium decay surrounding earnings moves, and you got to have a pretty strong stomach, but it works a lot. And so that can be a 1 day or 2 day trade. Um, Nick Fenton at Ticker Tank is actually shares an office space with us, and he does a fantastic job of sort of alerting us to the opportunities in that. But then uh, outside of earnings season, I typically try to look for trading strategies of 15 to 45 day type of periods where um, usually I what I try to do is find stocks that are overextended one direction or the other, and where I believe that the options are pricing for a continuation of that overextended move. Go out a few strikes and start selling some calls or some puts, whatever the case may be, and look for a pullback to buy those spreads back into. And so sometimes that can take 5 days, sometimes it can take 30 days. I try to be at least one month beyond the current strike or the current expiration cycle. So give myself some time for trades to come into me because anytime you're as the one of the hardest lessons to learn for traders, especially contrarian traders, is that you can be right, but a lot of times it can take a long time to get there. And if you're too leveraged or too close to expiration, you're right at the wrong time. So, for me, it's pretty contrarian plays, but with a longer term sort of time horizon and definitely less leverage than younger Andy Swan might have employed.
Right, the market can remain irrational much longer than you can remain solvent. Is a
Yeah.
saying that I like to use a trader. So you're looking at the whole universe of stocks, and you're looking for stocks that fit your technical criteria as far as overextended moves. So you're really scanning like the entire universe of stocks. You don't have a steady staple of stocks that you follow on a daily, weekly, monthly basis that you look for setups in. Do you have a scanner, or how do you find your potential trades?
So I do have a stable of stocks that I watch. It's probably the same as everyone else's, Google, Apple, these types. But I also look for stocks that maybe I've never really heard of or never paid attention to. Like a good example, probably the last month or two, you've started hearing so much about Tesla. So stocks that come to the mainstream financial news headlines. So, I'll just watch Yahoo Finance, to be honest, and look for names that I haven't heard in a while, and that's kind of an indication to me that it's worth looking at for potentially overextended move. And it's kind of that, once the bear's on the cover of Newsweek kind of theory, then things might be going the wrong way. And so it's a combination of looking at, this technical stuff and this data stuff, which I think is pretty tough to get an edge in because everybody has access to the same information. But then also just taking a step back from the market and looking at it a little more from, the average log in twice a day investor's point of view, and what kind of stocks might he be getting enticed into because of these headlines after the move is already over. I don't know if I
Oh, I'm
uh,
sorry. You had
talked too
mentioned.
long there.
No, no.
Yeah.
Go ahead. Go ahead. I'm sorry about that. You talked about a couple things there. You talked about Tesla Motors, and
Yeah.
are you currently active in that issue?
Yeah, I'm actually looking after after this big drop. I'm actually looking at starting to put some money into Tesla. I think that it's got tremendous upside. One of our companies is called like Folio, and we look for the enthusiasm behind the product or brand the company makes on social media channels. And the enthusiasm for Tesla products is out of control. It's amazing. It's like something you haven't seen since Netflix 4 years ago. And so Tesla to me is one where, yeah, it's overextended and everybody loves it, but it got beat up a little bit, and that's the type of situation where I like to get in on a positive brand that's currently being beat up, and so I'm looking to start stepping into that one for sure.
No, that's interesting. Okay, then you mentioned technicals here, and we like to talk a lot about technical analysis and pre-market info. I'm
Yep.
not a big MACD or RSI kind of guy. I'm pretty much daily, open, high, low, close, weekly highs and lows and stuff. What sort of strategies and technical analysis do you employ?
Well, I'm kind of with you. I don't think that there's any magic wand in there, or magic indicator. I think for me, it's really probably pretty bad advice for most. I just like to look at a chart and think to myself, you know, is this really possible that a company could be doing this in 1 month, 5 days, 1 day, whatever it is, and look for opportunities where I think it's obvious that momentum and excitement has overtaken rationality. So that's pretty much it. It's more just I don't look at the chart from a truly technical analysis perspective. I look at it from a historical map sort of perspective, and just kind of try to look for where the little guy has probably gotten off course.
All right, so let's just move on to the stock of the day, of the week, of the month here. The Twitter IPO. I don't know if you've been active in the private market at all in it, but priced at $26. Everyone's getting excited for the this thing to start trading. Are you delving into it? Are you hands off, or what's your feeling on this Twitter IPO today?
Yeah, I mean, I've probably got some exposure to Twitter through some of the startup funds that we're in, and so on. But so that disclaimer's out of the way.
Okay.
I like the company a lot. I think that there's enormous upside potential for Twitter, well beyond where the stock is being priced today. But then again, it's impossible to know a company like that. I just really believe it's impossible to know whether it's a $1.5 billion company or a $60 billion company. Like, that's the range that it could possibly be 1 year from now. And so for me, I'm going to let the institutions that are falling all over themselves to get into this kind of fight it out and establish a price and establish a trading range before I even think about trading it. I just don't think that there's any advantage here. I think that the advantage was gone, a year and a half ago, when people thought that all Twitter was tweeting out, what I had for breakfast. They didn't really see the real time advertising angle and this sort of stuff. And so, that edge is gone. That's the only edge I really know, and so I have to just let other people price it, and then play in that game once it's established.
Right. I kind of did that with the Facebook IPO. I didn't. I not on Facebook. Not a Facebook fan, but just the fervor, the people I know were involved in it. I was very bullish it off the IPO and wrote a couple articles to that fact. Got a lot of egg on my face as opposed to letting the dust settle off the IPO, and it actually did give some good entry points. I was able to use a few calls on the, once it bottomed around the 25. But being a short-term trader, I let them go a little bit too early. But now with the Twitter thing, I'm definitely going to be paying attention. I love when stocks start trading like this because they're giving you the levels. There's going to be a high today, there's going to be a low today, and there's going to be a close. And you're right, it's going to establish your range. So I'm going to stay on, following the levels of that. Let it establish a range. You have people, from the private market that want to cash out. So you're right. Let the dust settle. That it's excellent advice for our traders and investors. And we were having discussions on the desk about, where's the true value in the company. And Jake reiterated several times that, it's the data. It's the data. It's the data. And is that where you see the potential advertising revenue and the data that they're have the tabs on 250 million people at one time? Is that where the true value in the company is?
Yeah, absolutely. I mean, this is a company where I don't know of any other company where you could do this. This would be very interesting if it ever translated to television type of advertising. But this is a company where literally within, you know, 4 minutes you can place an ad uh, that is relevant to something that happened 10 minutes ago that everyone is talking about. And I don't know that that's ever really been done. And Twitter is the perfect mechanism to do that. And so it is the data, it's the share of mind that they have, and it's also just the concept of real time advertising that could have just major implications. But like I said before, I don't know if that's a $1.5 billion business or a $60 billion business. I really have no idea. I know it's a big idea, and they have a lot to execute to prove even current valuation. But that is the value. I think that's the value that we see. That's why we started this. The company that we just started called Likefolio is because we see extreme value in the data that people are putting onto Twitter voluntarily. It's just sort of like you get a window into the conversations and the topics that people are interested in immediately, and pretty much the NSA has been the only other organization that's had that kind of access for the last little while. So it's cool to level the playing field and figure out what people are talking about, when they're talking about it, and be able to reach them with an offer that adds value to their life. I think that's a big deal for Twitter, and it's going to be very interesting to see how it plays out. I think it's going to play out a little better than it would for a Facebook.
Right. I don't have the answer to this question. I'm not sure if you have the answer either. Maybe Jake or Brent or Joe can weigh in. But why'd they decide on 140 characters? Does anybody know the reason? Not 130, not 150.
Yeah, it's because the when the company started, it's purely SMS based, and the original limit for a SMS message was 160 characters, and so they limited your username to 20 characters and your content to 140 characters, and that's pretty much it.
Okay, good. Good. I got the answer for that. That's great. You mentioned Facebook there, and here's a stock that flopped off the IPO 38, went down to 17.55, and then you had this amazing run up to it hit 57.80 in pre-market trading. I believe the all-time high though is in the 54 range, and now it's just been pretty volatile here, vacillating around the $50 level. I'm not sure if are an owner or a shareholder in that stock here, but it's had a nice run here. You're having some consolidation off the earnings. It was good earnings. Do you have any opinion on Facebook?
I'm not a shareholder, and my opinion on Facebook sort of the same on as it was on Twitter. It's because what I would do is I would let the Twitter dust settle before I start trying to price Facebook. I think there's going to be a lot of money moving both, institutionally into both names, uh, or out of one and into the other. And until you start to see that trend, I just stay out of both. They're both swimming in the same water to me, and it's pretty shallow. So I wouldn't be diving in yet. It's just I think Facebook's an awesome company, and I think that the story is great, and the earnings are great, and the potential is amazing, just like Twitter. But I just let this other player's dust settle before starting to take any sort of big step on either name.
That's good advice. Just to close out the interview here, we started with talking about day trading and how you got involved in it, and but would you tell traders now or investors now if they wanted to get involved in short term trading? Are there any books to read or courses to take, or do you think it's just all about social media and following the social media for clues what's going on in trading?
Well, I think that it's just a combination of all the above. I mean, honestly, there's not a book that I would recommend. I think that if you're truly just getting started, there's some fantastic courses out there that Invest Tools and TD Ameritrade and all these all these brokers have for new traders. I think that those will get you going in the right direction. And then for me, the social media stuff, it it can be good, it can be bad. It's a double-edged sword, and I think that you've got to follow the right people. StockTwits is a great place to get involved because they do a pretty good job of showing you the names that have been around a while. But I think that at the end of the day, your success is going to be up to you, and you have to learn mostly to check emotion as soon as you open up your brokerage account, and you've got to learn how to take a loss. And once you do those two things, you'll probably be pretty well. Pretty well off. It's just a matter of how expensive are those lessons for you, and for everyone it's different. Every personality type is different. And so keep your leverage small. Learn everything that you can, every sort of instrument that you can. Get started with those very low risk, defined risk option spreads as soon as you can. That kind of thing can really help you outlast the learning curve from a bankroll perspective, and just to expect for the first little while to be pretty rough, and then I mean, I've been doing this for 15 years, and I still have patches where it just absolutely is crushing, and you lose a lot of money, and you have to be able to handle that. And if you can't, then you might as well you might as well do something else with your time and money that's going to bring you more joy. So find your time frame, find your instruments, and learn to take a hit without it messing you up mentally. That's
Right. That's excellent advice, and I hope that our traders and investors are hitting those words. Well, this is we've had Andy Swan here, entrepreneur and angel investor here, and he's given us an outlook on several issues here from Facebook, Tesla, the Twitter IPO, his penchant for following social media trends. Thanks a lot, Andy, for coming on, and we certainly hope you'll come on again as a guest.
cool. Love the show. You guys are doing a great job.
Okay, thank you, and have a good trading day. And we're going to turn things over here to Mighty Joe Young with the market update.